Hello there, this is fairbinaryoptions.com, and I'm looking at the euro and the Japanese yen today with some bullish eyes. You might say, how come with bullish eyes, as last Friday was so bearish? I mean, the market moved so much or so aggressive to the downside. Well, Friday is Friday, Monday is Monday, and this one here looks bullish from my point of view. I would say that the pattern that I'm looking for here is being called an irregular flat, and an irregular flat has some characteristics, if you want, as irregular failure. So an irregular failure looks like a three-way structure to the downside, so to have a corrective wave to the downside, then a move to the upside that goes more than 161.8 when compared with this move, and then a five-way structure, 1, 2, 3, 4, 5, that fails to take these lows. So it is mandatory for these lows here not to be broken. So these are mandatory to hold, and this should be labeled A, B, C. The whole pattern is being called a flat with a strong B wave and with a failure as the C wave comes and fails to take the lows in the previous wave A. Now, in terms of our market here in our example, I would say that the irregular failure starts from here, goes with a three-way structure, and this to be wave A that ends here. So this would be, in terms of Elliott waves, wave A. Then we have a B wave to the upside, a corrective wave that is channeling too well and everything is looking the B wave here. And then a C wave to the downside, and this C wave to the downside is actually an impulsive move. Normally we should use the Fibonacci expansion here. In this case we will use the Fibonacci retracement to measure the length of wave A, and then to look the minimum distance for this one to be considered irregular is 161.8. So the B wave needs to be longer or strong or bigger than 161.8 when compared with wave A, and that will make it irregular. What does it mean? It means that the market is impossible now to come to take these lows here. So this, if you are trading the regular spot market, this should be the stop loss. If you are trading the regular the binary options like we're doing here, this is the area where to buy call options. It might be that the market, the B wave here, is not ending actually here, but it's to end here. It doesn't really matter. This is coming only in, let's say, if this one is a triangle, so this to be the A and C trend line, this to be the B to D trend line, and if they are contracting, and they are contracting, it might be that the B wave starts here. It doesn't matter, as it is still above the 161.8. So this will be a classical C wave to the downside, an impulsive move, and now we should see some squeeze to the upside all the way towards the 161. So 147.53 and even more should be the name of the game. So what to do when the market basically comes, it screams here that it wants higher, then to go and buy call options, and this is what we are doing here. So let's write on the screen that I am buying call options with end of week expiration date on the euro and the Japanese yen, with, of course, the prerogative, or with the analysis, that this is actually a flat that ended with the impulsive move into this level here on Friday. We should take the highs now. Have a very great day. fairbinaryoptions.com. Call options on the euro Japanese yen based on an irregular failure. Bye bye.